Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. So those were the headlines, and let's begin with the markets. Well, it started the week on a flat note, but look how it has really perked up in trade today. At the high point of the day, all the key indices and Nifty 50, even though whenever it has opened lower and has been weakish, has defended, remember, the 17,500 levels, now comfortably above 17,650 odd levels at this point, 125 points gain. Bank Nifty, in fact, the financials are looking extremely strong with over 1% gain at the moment, and the financials are really adding a lot of support to the overall market, and the key indices also going up. Mid caps, however, underperforming compared to the other key indices, only 0.5% up, but definitely a broad-based participation is coming in, and that's also keeping the market strength going. Advances are the ones in favor in markets today. In terms of some of the stock specifics, the big heavyweight Reliance Industries adding its might with 1.8% gains. Also, some brokerages have been positive on that. Apart from that, financials, metals really keeping that support level going for the markets to be in good stead today, Pavitra.
Oh, absolutely. The metals really have it today, and they're holding this market together. And Reliance, like Nisha pointed out, doing well. Remember, this is after last week. We saw Reliance kind of act as one of the bigger drags on the index. So today, it's up to almost 2%, which comes forth, of course, is good news for the market. What's also doing well is the entire real estate pack. Remember, last week, in the past 5 days, we've seen the real estate index up almost 6%. Once again, today, a lot of the stocks, the likes of Indiabulls Real Estate, you have Oberoi, all of these holding up quite well. So something like an Indiabulls Real Estate is up 3.5%. On the downside, you're seeing the auto pack, seeing some cuts today, of course, after the big run-up that we have seen, and then some of the consumption names also in the red today. A few of those will be up for you, the likes of Nestle, Britannia, a little bit subdued in trade. That's what's going on with the market, and we'll come back to this. But first up, the big global news story that we're tracking. Russia's state-owned Gazprom on Friday announced an indefinite halt to gas flows to Europe via the Nord Stream 1 pipeline, citing the need for some additional repair work. Now, top EU officials tell CNBC that the European Union is ready to react to Russia's decision. CNBC's Steve Sedgwick is here with all of the details on this important story. Steve.
We've seen this coming potential, seen concerns that the caged tiger that is Vladimir Putin will use all the weapons he can to put pressure on the West, to put pressure on Europe, which has pretty well so far supported the Ukrainian people in their battle against the invasion from the Russians as well. As you can imagine, I came into this weekend with the key topic of conversation being the Italian election, and it was still absolutely important for Italy domestically, and every conversation we talked about it. But there is no doubt about it. It is this energy story which then dominated from start to finish. And I spoke to some incredible people from all over the world here at Ambrosetti, and I've never seen a story dominate Ambrosetti as much as this Russian energy turning off the taps of Nord Stream 1 at this time. Now,
we expect that Russia is respecting the contracts that they have. But even if the weaponization of energy will continue or will increase in response to our decisions, I think that the European Union is ready to react. Of course, we will have to save energy. We will have to share energy. We have high level of storage, and we are not afraid of Putin's decisions.
The key point is to pass through this winter without too many difficulties for European economies and European citizens. That's the key point. The first thing to do is, of course, to reduce our consumption. The second point is to diversify the supplies. We want to get rid of supplies coming from Russia, because we know that Vladimir Putin is going to cut the gas supply for Europe. So we have to enter into a diversification of suppliers. And the third point, of course, is to reduce the oil and gas revenues for Russia, because if we want to be efficient in these sanctions, we need to reduce the revenues that Russia is gaining from oil and gas selling.
All right, huge energy crisis in Europe, and Yes, winter is coming. That's going to be one big worry. So as Europe really slips into an energy crisis, remember the euro too has been depreciating and its value has slipped below 99 cents for the first time in 2 decades. And staying with the energy space, well, crude prices have also ticked higher, with Brent now at the $95 a barrel mark ahead of today's OPEC meeting. Remember, last month, top OPEC producer Saudi Arabia had flagged the possibility of output cuts to bolster the prices, which have slid from multi-month highs to current levels of around $95 a barrel. So sources have also indicated to Reuters that production cuts are likely to be rolled over, but others did not rule out an impending cuts at the meeting starting today. So all eyes would be on that. Of course, energy crisis in Europe to be watched out for very closely, Pavitra.
Oh, absolutely. This is the key talking point, and we are going to keep bringing you updates on this front as well. And the OPEC Plus meet, of course, important to watch. Crude did go all the way to 92, currently back around at around $95 a barrel. But with that, we're going to get into a short break now. On the other side, we've told you earlier that Reliance Industries is looking to foray into the FMCG sector. So an interesting package coming up for you when we come back. Welcome back. You're still tuned into Business Lunch, and let's now bring you some important stock-specific action. Emami Financial is gaining in trade. It's actually the top F&O gainer today, up 3.5% on the back of its August business update coming through. Abhishek is here with the details. Abhishek, take us through the highlights.
Well, Pavitra, as you mentioned, Emami Financial has given a business update for the month of August, wherein they say that, the disbursals are at 3,740 crores, up about 75% YOY, but it has declined by 4.5% on a month-on-month basis. However, for last 3 to 4 months in a row, the disbursals have been about 3,700 crore plus. So YTD or year-to-date, the disbursals are at 17,150 crores, up about 104% YOY. So the collection efficiency has dipped a bit but remains healthy at 96% for the month of August, which compares to 97% in the month of July. So over the last 4 months, their collection efficiency has been 95% or above. So stage 2, which are loans overdue for more than 60 days, that has improved on a month-on-month basis. However, stage 3, or the gross NPA ratio as we call, remains stable on a month-on-month basis. So they are guiding for the fact that, stage 2 and stage 3 ratios will improve for the month of September. Back to you.
All right, Abhishek, thanks so much for getting us all those important details on M&M Financials. But let's shift focus to the auto component space then, and stocks like Ramakrishna Forgings and Bharat Forge are buzzing after North America August truck orders rise to hit the 5-month highs. In fact, earlier today, we spoke with the management of GNA Axles, a company that, remember, supplies to the CV sector in North America, and Ramakrishna Forgings to really quantify the impact of higher truck orders from the United States. Let's listen into what the companies have to say.
First 2 quarters in last year also, we have performed very well. But suddenly in Q3 and Q4, there was a correction in the inventory correction in USA, then tractor market correction was there. But it is too early to say anything. If it will continue like this, definitely will grow between 15 to 20%. Overall, our export is around 55 to 60% revenue comes from export. Part of that is off-highway also in export. And North America constitutes around 30%, 35% of our total sales revenue comes from North America, whether it is CV and off-highway. And this overall sales will grow 20%, 15 to 20%.
We are not much dependent on Class 8. Overall, I think 23% has come down to close to 10 to 12% only. But what we see right now is the demand is going to be sustainable. But 21,000 number, I will not be able to vouch on. But we feel that the market is pretty strong in the North America and is going to continue in to the next year.
All right, so both GNA Axles as well as Ramakrishna Forgings talking about solid demand coming through. But with that, let's move on to another important story. Fast-moving consumer goods, that's going to be the next big bet that Reliance Industries is gearing up for. Now, the foray will see the company take its private labels to stores and also acquire local brands in order to pick up market share in what is a highly competitive market. CNBC-TV18's Shilpa takes us through Reliance's strategy for this new business vertical.
I'm excited to announce that this year, we will launch our fast-moving consumer goods business.
This will plunge Reliance Industries into a highly competitive $100 billion market and pit it against a list of veritable giants that include HUL, Britannia and ITC. But Reliance, which is no stranger to creating disruptions, is betting it can do it one more time and still stand apart with its approach. Reliance Retail will build a brand portfolio through a combination of its own brands, joint ventures and acquisitions under the Reliance Retail Consumer Brands umbrella. Phase 1 will see partnerships and acquisitions with strong local brands across key categories like staples, food and beverages, home and personal care, and beauty. It has already set the ball rolling with the acquisition of iconic soft drink brand Campa from Pure Foods, Socio from Surat-based Hijur, and Tamil Nadu-based food brand Varalakshmi. Reliance will also transform its existing stable of over 20 private labels into consumer brands and is likely to strengthen these brands with more launches and acquisitions. Experts say Reliance's strategy of acquiring local brands will help reduce its time to market significantly. But the transition will come with its own set of challenges.
A private label going public is a big move. Private label competence is back-end, public label competence is front-end. I would say Reliance needs to cobble together its ability to front-end brand positioning. That's very, very important. And I think that will take a decade or so to put together.
While brands like Campa will help Reliance compete directly with incumbent brands, experts believe that the impact of Reliance's FMCG foray on established FMCG majors will be limited, at least initially. So much of the initial strategy could hinge on offering new and refreshed brands at better prices.
Bulk of India today is still having a very, very low purchasing power, very low discretionary spending power. So they do have aspirations. Reliance comes in with a value proposition, and in this case, value is basically good price or a better price there. I don't see a challenge in some of the customers making a switch.
Also, many believe there is ample headroom in the Indian consumption play, especially given changing consumption patterns and aspirational tendencies.
The staples business is very large in terms of volume. I think there is enough scope for all of us to grow. We don't have to snatch each other's share.
For Reliance, the entry into the FMCG space makes sense. After all, it offers gross margins of 40 to 60%, higher than the 15% or thereabouts in the retail space. However, for Reliance to gain market share and grow volumes, experts believe that a transformation from private labels to running consumer brands will require investing heavily in brand building and marketing. But one advantage that Reliance has over a company like ITC or HUL is its extensive network of over 2,500 stores and over 520 billion walk-ins gives it a captive shelf space for its brands and also allows it to leverage the same supply chain for wider distribution of its brands beyond just its own stores. In Mumbai, Shilpa Ranipeta.
All right, an interesting story there, and Reliance Industries all set for the FMCG play. Let's see how the competition really in this space pans out after that. Moving on then, let's also focus on some of the macro important cues now. As per the trade data for the month of August released yesterday, well, exports for the month fell 9% sequentially to $33 billion from $36.3 billion in the month of July. Imports were also lower, coming in at $61.7 billion compared to $66 billion in July. And the trade deficit too is lower by around 4.4% at $28.7 billion versus $30 billion in July.
All right, sticking with some more important macro data that came through, India's PMI data also came in earlier this morning. So the global services for August came in at 57.2. This is versus the 55.5 that we saw in the last month, while the composite PMI was at 58.2 compared to 56.6 in July.
All right. While we digest all those important macro data coming in, let's slip into a short breather on Business Lunch. But don't go anywhere. Bengaluru waterlogged as heavy rains. Welcome back. You're watching Business Lunch, and let's get you an update from down south. Heavy rains continue to lash Bengaluru, and several areas are waterlogged and roads submerged after heavy overnight rains. Now, the arterial roads were also inundated, and there have also been reports of apartment basements being flooded. My colleague Harish Upadhyay joins us straight from Bengaluru to give us the ground report.
Heavy rains overnight has inundated several areas in Bengaluru, especially in the Bommanahalli, Mahadevpura, Whitefield area. Several IT companies in these areas have been affected. We are near Wipro on Sarjapur Road. You can see the entire approach road has been inundated. At the same time, the outer ring road too has seen huge traffic snarls because there's waterlogging outside the EcoSpace Tech Park. People heading to office on a Monday morning have had a terrible time dealing with traffic. It's not just offices which are affected. Areas around Whitefield, Panattur and nearby areas have seen residential complexes too being flooded. All this because lakes have been breached in the vicinity, the stormwater drains have been encroached, and the rainwater having no space to go. The roads are flooded. With the city on yellow alert for the next 2 days, people are hoping that the city administration can quickly jump in and ensure that motorists do not have a hard time, especially over the next 2 days while going to office, especially in areas like the Outer Ring Road and Whitefield. In Bengaluru, Harish Upadhyay for CNBC-TV18.
Harish, thanks a lot for bringing us that update. Clearly, it's quite a tough situation owing to that intense waterlogging that we're seeing in Bengaluru. We're going to keep bringing you updates on this through the day as well. But with that, let's move on and talk about another important global story. The United Kingdom will get a new Prime Minister today, with Liz Truss emerging as the strong favourite over Rishi Sunak to succeed Boris Johnson. Here's CNBC's Jeff Cutmore with all of the latest on this one. Jeff.
It has run and run, and we've watched programme after programme of debate and counter-hustings and counter-arguments. And I think the one positive, if you like, that you could take away from this is that we actually have two candidates who have offered different recipes for the current ills that face this country, this toxic mix of high inflation and falling pound and rising gilt yields and cost of living crisis generated by higher fuel costs. So we know that there's an awful lot for the next Prime Minister to address very quickly. At the moment, clearly the bookies have Liz Truss in the driving seat when it comes to who becomes the next Prime Minister. Perhaps just to remind our audience, if they're outside of the UK and are not familiar with the process, this Prime Minister will ultimately be elected or selected, if you like, by 160,000 members of the Conservative Party. So as Boris Johnson leaves, the Conservative Party is ultimately anointing its new leader and consequently the next Prime Minister of the UK. The question then is what comes next after this announcement that we're due to get at 12:30 today? Well, tomorrow Boris Johnson will officially hand in his resignation and the new Prime Minister will be appointed. After that, we have to wait and see exactly what the policy platform looks like. But let's just go with the possibility that it is Liz Truss. There's already some talk that maybe there would be a suspension of power bills for consumers and businesses. That's something that the Conservative Party has not in the recent past been keen to entertain. But I think there is a lot of pressure on Liz Truss to come up with an immediate answer to concerns that these high energy prices are going to push businesses to the wall and ultimately see consumers impoverished. So that is one of the key issues that the next Prime Minister will have to address very quickly here.
All right, so important developments there on the political arena in the UK. And as we wind down on Business Lunch, and some tragic news. Well, industrialist and former chairman of Tata Sons Cyrus Mistry died in a road accident about 150 kilometers